Hello, this is the TradeSat US Stocks and Futures Market Preview for the week beginning Sunday, the 4th of August, 2024. I can't believe it's August already. And ending Friday the 9th. So we'll see what we get here. This has been an interesting week. Here's the dollar index daily chart. We got a cup and handle forming. Obviously, we had a 13 sell signal right at the highs there, and that pulled us back, and that's fine. But that's already, even though it hasn't completed the signal yet, it already would have made you money. And then now, if you break out, the dollar's going to be strong, and we'll see what happens. Obviously, lower interest rates shouldn't make the dollar stronger, but you never know until you get there. Here's the euro dollar. Usually the inverse of the dollar index, but look at this. It's not at all right now. Like a big breakout to the upside on the euro dollar. So that means the euro up, dollar down, which makes more sense with the interest rate situation. Here's the pound dollar is what it is. All right, so let's talk about stocks. ES front month futures contract. This is the daily chart of the broad market in futures form. So we've pulled back a bit. Obviously, we're sitting on kind of a key support level at this point, and we're holding that level. Obviously, markets get their pullbacks. We had one similar to this back in April, and then turned around and whatever. So there's a lot going on, obviously, in the world. We got the Iran situation. There's some chatter about the job numbers and whether the Fed's going to have to start cutting rates sooner rather than later, which I think they might. And I'm sure there'll be one cut at the next Fed meeting, but will they do it even in between meetings at this point if this thing starts to fall apart? But at the end of the day, the AI stocks have been completely overvalued, right? So that's that coming back to roost. Advanced decline ratio is not pretty, so there's more stocks down than up right now. But none of this is catastrophic at this point. We're still sitting, well up from where we were a year ago. Here's the S&P cash, same story. You're 350 points off of a high of 5,700. You were at 4,100 last October, so nothing there. NASDAQ taking more of a beating just because the AI stocks. And again, these things were so floated. We'll talk about this in a minute, but I mean, so overvalued PE ratio wise, probably deserve a pullback. We'll see what we get from that perspective. Russell 2000. This is the thing that's a little scarier because this is kind of the future of the economy, right? And always the small cap stocks. That's a bigger drop over the last 2 days, Thursday and Friday, than the other stuff. So. Percentage wise, I mean, you're talking about almost a 10% decline in 2 days. So we'll see what that leads to ultimately. It's still holding up near highs, but not like great. And that was a big drop. We haven't seen a Russell move like that in quite a while. Crude oil dropping. The thing about oil is it's a two-way race, right? When oil goes down, inflation goes down because it costs less to transport things around the country and do all that type of stuff. But at the same time, sometimes oil going down means what? It means that people aren't doing as much and driving as much, and that's a slowdown in the economy. So what that means so far is not much because we're still mid-range for the year. But that's a big drop, again, from 79 to 73.5 over 2 days. And if we crack the lows and get back to the 60s, cool. I mean, it's going to be good for prices at the pump, but it might not be good overall for the economy. So we'll see what we get from that. Bitcoin also took a hit. I won't really comment on that. My own thoughts on that are what they are. But, it took a hit down to 61,829 right now, and it obviously is still open because it runs 24/7. So that 13 cell signal back in April was the high, remains the high. Our signals work. That's that. I hope you've looked at our video we posted this week about some of the signals that we've gotten recently. TLT, the 20-year bond ETF. This thing's shooting up. So bonds up, rates down. That's a good thing for mortgages and refinancing. And, the housing market has still been hot. So, in certain parts of the country, as lower interest rates kick in, you're going to see a better housing market scenario potentially. And we may live off of that because it is what it is. But that's a pretty big, literally from 92 to 98 on the 20-year bond. We're heading towards the highs of the last year already. So we'll see where that leads. The VIX closes At 23.39, but it did hit almost 30. Remember, 40 is the key number on the VIX, so if you were to spike the VIX to 40, the market would probably drop quite a bit in the meantime, but that would, usually somewhere around there is like a day or two within that is usually the bottom, and then we'll see what happens. Advanced decline ratio on the NASDAQ was negative, but not as negative as it's been. This is on the New York, negative 1443. We've had worse days. We had some positive days this week too, so it's kind of a mixed bag. Trend closes at 1.16, 1.61 puts the 10-day moving average at 1.16, and we're still well above the blue line. So the orange line above the blue line is not a sell signal on the broad market. Usually, if you're really going to crash the market, you get this signal, and we're not getting it yet. So we'll see. For the week, Monday, so you go back to the prior Friday is the left side of the chart. Monday, small gap up and flat, filled the gap. Tuesday, small gap up, sold off a little bit. Wednesday, gapped up. The Fed announcement didn't do much. Thursday, flat, basically, and then sold off. And at that point, you're flat for the week, and it's not until, even though you sold off quite a bit, and it's not until Friday that you get the big decline. NASDAQ 100, fairly similar. Thursday we were even for the week. So, the headline stories are, the market's falling apart. But is it really? Did we really do much this week at all? I don't know that we did. NASDAQ volume's been high. We've hit almost 7 billion shares one day, and we're at 6.2 days. So, we'll see what that means ultimately. Now, let's take a look at some of the daily charts of some of the big stocks. Apple, which ended up closing green for the day here, right after everything up $4.52. So again, Apple, but Apple's not an AI stock. Remember, Apple never got the valuation boost that some of these other stocks, like Google and Nvidia and everybody did. So maybe the other ones need to come back more, as you'll see in a minute. Amazon, this one's the crush. They're talking about their signs of a weakening economy. So this doesn't look good. Amazon now sitting on lows since February. Meta dropped quite a bit. Again, this is now an AI stock, but it never really went up like Nvidia and some of the other ones. So it's getting hurt from that. Google also getting hurt. This doesn't look good at all, by the way. Like, this thing breaks whatever it could be. Like, let's go back and fill the gap at 155 at least on this one. Goldman Sachs, which was at all-time highs finally. This thing was stuck until April and then ran, and it is what it is. Netflix has been sliding, but this thing over the course of the last year and a half or whatever is up quite a bit. Tesla had rallied, and now it's pulling back, getting hit a little bit is what it is. Nvidia, I haven't adjusted the thing, but it's still just doing what it does. Zoom pulls back, heading towards the lows on Zoom. And for solar, pretty much, because why would the solar stocks be hit in the middle of all this? So there's nothing really there to worry about. So that's the market. I don't see anything. You look at some of these big stocks. Yeah, there's a little pullback going on. I think, again, concerns about what's going on over in Iran and Israel. Concerns about, obviously there's discussion about the election. One employment number finally, after all the ones we've had prior, showed slowing job numbers and higher unemployment rate, but it's still only 4.3%. The real thing, I think, is the valuations of the AI stocks, which are so heavily weighted on the NASDAQ, and them pulling back, and so we'll see what we get from there. In terms of economic data coming out in the week ahead, on Monday we have Canada's on bank holiday, but we've got services, ISM and final services PMI numbers here in the U.S. That's it. On Tuesday, trade balance here in the U.S., that's no longer that big of a number, especially because we don't deal with Forex that much. On Wednesday, crude oil inventories in the 10-year bond auction. On Thursday, natty gas mortgage delinquencies, final wholesale inventories, 30-year bond auction. And on Friday, no data here in the U.S. So this is one of the lightest weeks we're going to see in terms of data ahead. And, we're coming out of summer. We'll see what we get. But, it is what it is. We're 2 weeks away from August options expiration. That'll be a slow one as well. But then shortly after that is usually when things start to pick up. And then, the run through the end of the year gets a little more exciting. So we'll see what we can find. Charts as usual brought to you by Ninja Trader. We've got some great stuff coming from the trade side perspective soon. And have a great week and a great trading session.